morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are likely to recover some lost ground on last trading session of the week. SGX Nifty index indicates a positive start for the broader index with gain of around more than 50 odd points. Talk about Wall Street, it's ended higher on Thursday due to the testimony. Bank of England hikes interest rates by 50 basis points. S&P Nasdaq rise to end 3-day losing streak as investor snap up tech shares. We're going to be talking about it in detail. Asian stocks turn lower amidst elevated bond yields. Talk about FIIs. That's where probably you see sell-off after 3 consecutive sessions of buys. Sold shares worth to and tune of around 693 odd crore. Talk about DIIs, they continue to show support. Purchase shares worth around 219 odd crore. FNOQs, beg your pardon, 14 stocks have seen a long build-up based on the percent. These include Coromandel International, Balrampur Chini, Jubilant Foodworks, Bharat Electronics and Federal Bank. 94 stocks have seen long unwinding. Now these include something in the like of Oracle Financial, JK Cement, Rain Industries, Exide Industries and Punjab National Bank. Apart from that, 68 stocks have seen short build-up. Now, the names include the likes of RBL Bank, Indiabull Housing Finance, Petronet LNG, Vodafone and Chambal Fertilizers. Almost 14 of them have seen short covering. And this includes the likes of something like Max Financial Services, LTI Mindtree, Tara Chemicals and MCX. Apart from that, stocks which are currently under FNO ban on NSE, RBL has been added to the list, and what has been retail is BHEL, Hindustan Copper, L&T Housing Finance, beg your pardon, L&T Finance Holdings and Punjab National Bank. These are some of the names that we have on the list right now. Well, we saw some amount of pullback in previous session. And it needs to be seen how do the global cues right now are stacking up. Now let us get going and discuss some stocks and strategies with Sneha Seth, Derivatives Research Analyst at Angel One. Good morning there.
Good morning. Thanks for having me here.
Pleasure is all ours. Markets have scaled around that record high levels. A little bit of pullback that we've witnessed in the previous session. Now, at this point of time, do you see a recovery on board given the kind of trade setup that we're looking at? Or you see some amount of further losing of ground for markets, your strategy for the market participants out there?
See, if we see Nifty yesterday, we have been seeing Nifty, heading towards record highs. In fact, hardly 1 point, we missed it with 1 point yesterday. But I believe overall, this kind of a profit booking with such a strong run was very much on the card. So I believe any dips at present, if you see the data, though FIs were sellers in equities, but if you see the index futures position, they have added longs in yesterday's session. The long short ratio is around 53, which is again a positive thing that clearly indicates they are still holding longs more than the shorts what they have. So overall, I believe 18,700 is the immediate support, followed by 18,650. So 18,650, 18,700 is the support. In today's session, if we see any dips during the opening time, so I would say that we should utilize this dips to add longs. The overall biasness remains positive. If you see the futures, which was trading at the premiums in yesterday's session, has also surged despite some profit booking from the high level. So that is again a positive thing. Although the banking index has been a major pain area at this moment, because in banking index, in fact, all the banking, especially the private sector banks, has not been performing of late. So once we see banking index gaining some strength, then possibility is very much high that we may head beyond 18,900, which is the immediate resistance. So for now, we would say that we need to keep a close watch on banking index. For now, banking index, the support is around 43,400, 43,500 would remain the support, and on the higher side, 44,000 is the hurdle. So banking index, if any recovery from this space, shall boost the overall sentiments.
All right. I also wanted to understand, would you now suggest the viewers out there to go long on bank index and the strategy that they should take, because we saw some amount of pullback there in the previous session, also because the weekly FNO expiry played out. Nifty also, to an extent, after two consecutive sessions of gains that we saw, surrendered to some amount of selling pressure. So with that in mind, what is the strategy you think that the viewers should take right now?
See, I would say for banking at this level, I won't say, but any dips towards say 43,500, 43,450 zone, then one can take a chance by buying an at the money call options. In that case, I won't say that you should start accumulating good counters which are trading at a lower levels. In fact, we are liking quite many banking names which have been in a consolidation phase, and we expect some up move in that. So one can focus any dips there. We can focus on individual counters and even think of buying an early money call options.
Okay, all right. So that's the word coming in. Sneha, I wanted to chat about the correction that we finally, I don't know if I can use that word correction, it's a strong word there. But some pullback that came back on the mid cap and the small cap index after 8 consecutive sessions of gains, right? So within that, which are the pockets of opportunity you think that the market participants now can look at, probably because the risk reward ratio right now at least seems skewed in the favor of these broader counterparts, right?
Yeah. So if you talk about these sector wise, I'm liking actually Tata, like metal space. Yesterday we have seen some buying interest in Tata Steel and other counters as well. I would say that will be the space you can look forward. But overall, I would say any move in case of banking index will really boost the sentiment. So I would really want to, it has been long time that it has been in a consolidation frame, and I believe very soon we may see an momentum in that particular space. So one should probably look forward for that thing. And apart from that, if you want to focus on any other space, then I would say metals is the space which you can focus.
All right, Sneha, we're just going to come back to you and check with you 2 profitable bets for our viewers. But before that, I'm going to get going on stocks and news, because that's where most of the traction lies. IT stocks, that's going to be in focus. And Sneha, I'm going to come back to you and touch base on IT sector and the potential gems in that sector, if at all, because the Accenture results have come through. There's a bit of cautious read-through on that. Landmark Cars, BPCL fundraising, and Orchid Pharma. These are the ones that we're going to be talking about. First, Accenture Q3, where the revenue is up by 3% at $16.6 billion YOY. GAAP operating margins stood at around 14.2% as compared to 16.1% in the corresponding quarter of the previous year. That's the one. And the new bookings were at $17.2 billion. They also declared in a quarterly cash dividend of around 1.12 per share, kind of a dividend history that we saw. And in terms of outlook that is suggested, Accenture expects full year revenue growth to an extent of 8 to 9% in local currency terms, and it expects the operating margins at around 14.2%, expects the free cash flow of around $8.1 billion to $8.6 billion. Overall, it's a bit of cautious undertone there for IT sector, no surprise in there, but still what JP Morgan suggests at this point of time, essentially, for the Indian IT with this kind of results that have come through is the weakness in the CMT manpower particular division out there, where the spends are also a bit of conservative. It is negative for something like a Tech Mahindra, LTI, Mindtree and Persistent. It remains overall negative on the sector. For Morgan Stanley also, they have maintained that cautious stance and they've confirmed the concerns of slowdown for Indian IT vendors. Landmark Cars, where the block deal TPG again has sold off shares, was likely to sell. A block deal perhaps would have already taken place. 11% stake out there needs to be updated, and the block deal was seen to an extent of current market price discount of 5%. The third one that we have, BPCL fundraising plan, where the right issue is going to be considered on June 28th. These are the 3 stocks that you need to, 3 to 4 stocks essentially. IT basket is the one where we need to, probably read through the numbers. But Nifty 50, we're looking at market open right now. Let's address that for you. a little bit of pullback in previous session. Today's session is acting no different. We probably saw some amount of lost ground would be recovered, but we saw gains to an extent of, beg your pardon, losses to an extent of 0.2% out there. 18,750 below that level. It's sitting below that level right now. Needs to be seen if it's just a temporary setback for the markets or something which is change of direction. Unlikely, but you can't really preempt the market sentiments right now. Bank Nifty, that's another one that we need to keep a close eye out on. A bit of underperformance from there itself, 0.2% of loss. In previous session when the weakness was around the markets, it was HDFC Twins which held on to the markets and Bharti Airtel which was showing some strength. Remains to be seen how does these three counters stack up right now. Talk about the mid cap index and the small cap index right now. Gains to an extent, beg your pardon, losses to an extent of 0.4% out there. 8 consecutive session of gains coming in for mid cap, a little bit of surrendering pressure. Today it accentuates small cap, flat opening with positive bias out there. So right now the negative sentiment prevails, can't really recover, but IT, that's the one that we spoke about, right? Accenture read-through has a bearing on the IT space right now. The pessimistic outlook continues to remain for the sector with losses to an extent of more than 0.5% out there. While other defensive name, FMCG too, isn't holding too well. Talk about other sectoral indices that we have. That also needs to be seen there. Pharma index, one with the very flattish undertone out there, flattish start with a negative undertone. In terms of auto, well, we're seeing losses to that also, in that index also, 0.3% out there for auto. In terms of other sectoral indices that we have right now on the charts, let's play that up and to understand how is the story stacking up. Consumption basket, well, not a pretty picture there as well. You really need to pick and choose now the sectors which have been doing well. Right now we're seeing it looks like it's a negative sentiment, a bit of pullback coming in on the final session of the week, which has otherwise been a splendid week for the markets. So can't really complain. A bit of pullback is all it takes before jumping into the new highs. Nifty 50 right now, well, down and out around that 18,700 levels. Losses are just getting deeper. The cuts are just getting deeper in nature. But let's talk about the top gainers and the top losers, and also the advance and declines that we have in the list, just to see how the market sentiment has been stacking up. A bit of a delay there, needs to be updated. But right now I'm going to go back to Sneha and check with her on the read-through that is coming for the IT space. Accenture, we've seen the negative cautious outlook being again played out for the sector. No surprise there, but what looks interesting, if at all, Sneha?
I would say if you talk about IT space, it has really been, not performing the way it should be. In fact, we have seen any, up move has been, has been attracting some profit booking or selling at the higher levels. So I would say one need to, avoid this space at this moment until we don't see any decent, move in, especially if you see the index around 29,200. That is the immediate resistance for this particular space. So until and unless we are trading below that, I would say one need to avoid, taking a look on this particular space as a whole, and should focus on other counters wherein we have seen decent moves. So I would say that for time being, better to avoid this space.
All right, so better off avoiding this space. But Sneha, 2 profitable bets for our viewers out there this morning.
See, I'm liking banking space at this moment. I'm expecting an up move in this space. So first counter would be ICICI Bank. If we see, we have seen a strong run wherein this counter was formed a base around say 820 odd zone, and then we have seen a smart up move towards 950 plus levels. We have seen some profit booking from the higher levels, but from here we are seeing some buying interest coming in. In fact, I see out of the money calls being quite active, and we have seen some unwinding in those strikes as well. So I would suggest buying an option over here. 940 call option in the range of 7 to 8, and the stick stop loss, the stop loss will be around 0, so 0.05 will be the stop loss, and the targets will be around 19.8. Apart from this, the other counter which has been outperforming lately is LNT. If you see, it again today we have seen it hitting a record highs, and I believe we may see further strength in this space. We have also seen 2500 call options being quite active, so I believe traders are eyeing those levels now. So I would suggest buying this counter as well in options. So 2020 call option at the money call, we would suggest buying in the range of 24 to 26. Stop loss should be maintained around 8, and the target will be around 58.
All right, Sneha. So these are actually what Sneha suggests is also the top gainers that we have on the list: Asian Paints, Dr. Reddy's, ICICI Bank, Bharti Airtel, and L&T. L&T, like she likely pointed out, is at record high level. Let's actually also check in the top losers that we have right now on the list, and that includes the like of Adani Enterprises, ONGC, Adani Ports, Hindalco, and Tech Mahindra. Tech Mahindra is probably the one which is surrendered to selling pressure, 1.5% loss out there. But Adani Group of stocks, because of the statement that has come in, is probably a little down and out on account of that. Sneha, we're just going to leave it at that. Thank you so much for taking out the time and joining us this morning. All right, we're going to be talking much more about the fundamentals. And to take the discussion forward, we're being joined by Saurabh Jain, Equity Head, Research, Fundamental SMC out there. Good morning there.
Hi, good morning.
All right, I'm going to start off with your assessment overall on the capital goods space. L&T today is at record high. Yesterday we had, Ramdev Agarwal talking about capital goods space being in complete demand and probably the sector which one needs to watch out for. What's your assessment on that?
I think it is absolutely correct to watch out for this sector. I think it is a very good proxy for the India infrastructure growth story, and the first leg of investment is coming from the government itself, and the even private sector. If you see the private sector, most of the industries are now close to be working around 70% of the utilization rate, and talking about the further investment in their businesses. So if you talk about this sector, I think this sector is showing outperformance is approximately close to a half 1 year, and I think this is the sector which where one can make good amount of money in the next 2-3 years. So especially I think one should have large caps like L&T, Siemens, ABB in their kitty, and the smaller ones too, like Batita, maybe Vortec, Wabek kind of small caps in their kitty.
Sure. Okay, that's the word also coming in. Overall, I wanted to understand what are you making out of the Accenture earnings and the read-through that has come in for the IT sector. It's just about reiterates the pessimism that the sector has witnessed, and probably the fact that the second half for the sector wouldn't be any different as compared to what we've seen in the previous quarter. But do you see things any differently?
See, I don't think so. Things are turning up for the sector as a whole. I mean, if you look at the last few quarter earnings, the IT sector has started underperforming since November 21, when the Fed decided to inch up interest rate in order to combat inflation. I mean, that time, I think the global markets dynamic changed, and growth stocks fell steeply, and there was a buying in the value stock. Since then, we are witnessing that what is happening in the global market, especially in the industry, BFSI in the America, have now sending jitters to the Indian IT companies in terms of lower order and margin pressures, and there are a whole lot of things. If you look at the all the industry there, I mean, they are trying to protect their margin. They are shelving off their employees. At the time of the COVID, they hoarded employees actually, and now they are now they do not see business coming in that way. And these big IT companies are finding difficult to get orders, bigger orders, and in fact, because of the high end attrition in the past, they are finding even difficult to convert their order book to bill, apart from the margin pressures. So I think these companies are hearing for a lower kind of a growth in their revenue, and now even the valuations have now didn't touch the trough period. the way they used to in the times when the times were wrong for the sector. So Accenture results have again given a fine print that yes, the outlook given by the company doesn't mirror any good in the future. And I think IT biggies will like TCS, Infosys will come in that the results will come in this fashion only. So I feel this sector will continue to underperform.
Okay, a sector which will continue to underperform, but let's talk about the sector which otherwise probably stage some amount of outperformance. But today also, if you talk about cement space overall, there was a bullish theme around the whole infra spend, it being a pre-election year, probably the momentum picking up, and monsoons also not playing down for the sector. But today JP Morgan has come up with a report where it said that the risk reward ratio for the sector is increasingly unattractive and they remain underweight on Shree Cement and Novoco. And also with the gas and the coal price likely to have bottomed out, they're particularly saying that at this point of time, nothing seems to be really very positive coming in for the sector. Do you think the optimism around the cement space is just being overplayed at this point of time?
I don't think so in that way. I think this sector will remain market performing considering the fact there is a lot of host of activity going on the infrastructure in the real estate sector. The benefit that these companies are going to find in terms of the freight cost and the lower petcoke coal prices. I mean, these petcoke coal prices, oil prices are going to stay for long. Because see the economic data coming out of China. These are the tailwinds which will be there for the cement sector as a whole. But in my opinion, what will happen because of the huge capacity addition that has been envisaged, it will now eventually come into the production and which will cap the prices. So I would rather say stick to the bigger names and not essentially the smaller names, because smaller companies will find themselves difficult to compete with the bigger ones. So in that sense, I think the sector will be market performer and stick with the companies like Ultratech Cement.
All right, stick with a company like Ultratech Cement, which probably is a pan-India player and of course has a good operating history, if I may just say so. But let's talk about the entire defense space right now. It's gained a lot of traction with the US visit, the statements that have been coming out. Significant performance has already come through with something like a Mazgaon Dock player and all of those companies also doing exceptionally well. But what do you like from defense space per se, and also your picks from the mid-cap overall index?
See, if you look at the defense space, in any sector which becomes outperformance, you create alpha in your portfolio from two sides. I mean, the expansion in the earnings and the expansion in the multiples. In my opinion, expansion in the multiples have already been done. Look at the HAL bar or the other Bharat Dynamics and players, such companies. The multiples have expanded in such a way we haven't seen so far. And these companies are yet to show their order books in terms of revenue. So in my opinion, I think the most of the money has already been made, and there is certainly some only something is very very small stuff is left on the table. So in my opinion, if you have it, you continue to own it. Otherwise, I think you should start reducing your position in this sector.
Okay. Something like a Voltas, that's probably the one that I wanted to talk about. The stock is down and out by more than 2.5%. Not exactly sharp losses, but some losses out there. While UBS has downgraded the entire rating on the counter to neutral and has also cut the target price. It says that the industry blues continue to persist and the market share with the operating margin scales up. It's a tough ask basically. There's a rising competition, there is a pressure and margins coming in on account of that. What do you make out of it?
I think both things are correct. There is a good amount of competition in the belt, and even in the good times, Voltas has hardly surprised the street in terms of growing up their margins. And this time around, when the unseasonal rainfall, because of the unseasonal rainfall, we have seen demand contraction in the space like AC, refrigerator, which has a good amount of bearing on this company. So essentially, I think companies like Voltas are certainly a.
Okay. Within the mid-cap space, what else do you like?
I think mid cap space is a lot buzzing, small cap space is a lot buzzing. The few sectors which we are overweight on are infrastructure, capital goods, banking, and even power. I think these are the spaces where one has to look to build the portfolio, and the companies in good companies in the mid cap space and the small cap space can generate alpha in the rest of the year.
All right, sir, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. With this, it's a wrap. Thank you so much for tuning in.